Good morning everyone. We're back again with another week of your daily Forex analysis. So just to kick things off, let's just do a quick recap of what happened last week. So last week we potentially identified a reversal on the dollar, and that was noted by price hitting previous key structure, and now price seems to be forming a head and shoulder formation, and that head and shoulder formation is still valid. We have a neckline, we have a potential double shoulder, very possible to see price break to the downside, possibly retest the zone and then continue to drop. And if that's the case, then we will definitely look for long positions on pairs such as Euro USD and GBP USD. So let's start with Euro USD. So Euro USD on a larger time frame, as you can see, we initially thought that this was a break back into the original downtrend, but this could possibly be some sort of fake out, meaning you see, if you look at these candles here, as price broke in, it then broke out, and both were equal length. So you had a bearish to the downside, and it was met with a bullish push up to the upside. Now we see price forming a correction at previous key structure. So one thing to look for with this sort of setup is if price breaks out of this bullish descending channel, breakout, give some sort of lower time frame correction, preferably 15-minute chart. We could then set a buy stop around the zone right here. Our stop loss below key structure, and the first target would be the high of this bullish descending channel, and the second target should be the middle of this free range, and the final target will be the free range key structure point. So that's my outlook currently for Euro USD. I will be setting a alert to see if price can then break this bullish descending channel. Let's go for GJ. So GJ from last week, price then got momentum to the downside. Price has broken below this key support area, or I like to call it key structure, and you can see it built up the momentum by forming this bearish ascending channel, broke below. Currently it's now back at the zone retesting. One identifier to wait for to see if this short position is valid is to kind of see what happens at this area. So you can see that this is more like a lower time frame correction that is forming. One possible entry would be to set a sell stop below here and your stop loss just above key structure, and look for the push to the downside, possibly to retest this previous key structure where price shot up from, and then to see if the price will break down further out of this bearish ascending channel. As we have noted, this is a potential double top on the weekly and daily time frame. UJ, similar formation, price kind of broke below key structure, could see potential further dropping to the downside. If you look at this, this could be a potential lower high that is formed right there, met with this lower low, previous lower high, previous lower low. So very possible that as price is currently at the previous lower low, we could potentially look to form the third lower low around the zone potentially. So you could look for shorts below this previous key structure zone. If price does break below this level, as you can see, this level has held a couple of times. We've got 1, 2, we've got 1 here, So very possible to see the price break to the downside. GU in a similar light when it comes to Euro USD. Where didn't show the formation, price gave previous tested key structure, broke above previous range, and now we just basically will look for price to retest this range in the form of this is a very strong bullish impulse to the upside. Very possible to see price break out of the structure, give a lower time frame sort of correction, and then retest the zone where it came from. So that's the current outlook. If price does then push below, give a retest of the structure, obviously the price will change. One thing to take note of is that you may have a analysis or outlook. Market always changing. It's never what you think it is. Sometimes you may be right, sometimes you may be wrong. One of the key things to look for to avoid bad trades is to just wait for your setup. So if this setup does not present itself, we will not enter a buy right here, or we will not enter a buy as soon as the breakout, because it's very easy for price just to give us a sort of let me just clear this so it's clear. Very easy for price to just kind of give a candle, green candle, you think it's a entry signal, and then price just fakes you out and then hits your stop loss potentially before even then going to the upside, or even potentially just breaking down further and continuing to the downside. So we just look at possibilities of what could happen based on price history and stuff like that. So for me, one of the key identifiers is to look for a sort of impulse. This is where price was driven up quite aggressively. As you can see in this previous candle, you have hardly any bearish candles that you can see from this previous push up. And then you just look for a sort of correction, and then you look for a break of structure and lower time frame correction. So very possible that we might get this Euro USD signal today. If price does push up, give a sort of lower time frame correction, we will then enter a long position.